All right, good afternoon, everybody. Give me a second. All right, good afternoon, everybody. Today is Thursday, August 6th, and this is the New York 8 what is it, PM trading session. So as I mentioned yesterday, I don't think we'll be having a lot of AM trading sessions. I know yesterday we had like a morning session and the afternoon session, but most of the times I'll just focus on the afternoon session. I do like the afternoon setups with these strategies that I mentioned yesterday. And I know we were supposed to start at 1:30, but I couldn't make it at 1:30. So today we'll just do 2 to 3. Yesterday, and since I had after morning and afternoon trading sessions, we ended up taking 5 trades. We had 4 losing trades and 1 winning trade. So if you go ahead and kind of look back, and those were, I really don't like taking that amount of trades. But in the afternoon, I normally trade on a different set of accounts. In the afternoon, I don't trade on my main accounts. But if we look at what happened yesterday, in the morning for US30, let me just take this off. In the morning for US30, we took this trade that's right here. That was based off of this inner supply zone right here. And yeah, it was based off of this candle. So if we kind of look back and turn on these zones, you'll see up here where this box is marked, we had an inner supply zone right there. So we put our pending order below the low of the candle. Actually, it was there. And it was a big trade, this one, because it had a 90-point stop loss. And for me, I'm going for a 1:3. I did say for you guys, maybe go for a 1:2, or if price hits 1:2, you set break even or take partials. But this one ended up eventually hitting in the afternoon. We did take a buy in here, which lost. And I actually remembered for this strategy, just take one trade at a time. So it should be similar to the FIFO workflow, first in, first out. So don't take 2 trades at a time. So if you're in a buy and if you get a sell opportunity, don't take the sell, just wait for the buy to pull through or whatever is going to happen. If you're in a sell and you get a buy, or if you're in a buy, you get a sell, just wait for the buy to finish. Because as much as we took this, and when we're taking this buy here, I did mention that I was going in with a very low lot size because I was pretty confident US30 was going to spike down, because we did have a lot of liquidity here, all of these wicks right here, right? So buyers tried to push US30 up, and we were around the all-time high, which is where we took the sell from. But when US30 does this, eventually you have a big spike to the downside. So we did take that small buy yesterday here. And I took it because, again, the afternoon session gives you like pretty tight stop losses. So I think our stop loss was 20 points, going for a 1:3. It did go to like a 1:1, but reversed and hit stop loss. But you can see eventually the candle, the big spike, we had that liquid. You see that big candle here to break all this liquidity, buy side liquidity that was here. But anyway, this one winning trade took us out of the hole. But yesterday, since for these trades I'm only risking 0.5% per trade, yesterday with 5 trades. Is it 5 trades or was it 4? I think it was 4 trades. But anyway, we had like a net minus 0.5 day yesterday. If we really didn't take this US30 buy in the middle here, we would just have had to get out at break even. Today, let's see what's happening. And then I did also talk about the order block strategy. So this morning as well, I took this sell right here. So for the order blocks, you just are trying to look, and we might get a selling opportunity here, or even actually a buying opportunity on this 15-minute candle. So with the order block strategy, you just need to look at what price is doing for the, around the order blocks. With the order block strategy, I just trade it on the 15-minute time frame. But for this supply and demand strategy, I trade it only on the 5-minute time frame. So if we can kind of see, what time is it? I don't want to miss any of these trades. If we look at gold here, there's this setup that came up before the afternoon session. So what do we see here? Remember, for these supply and demand setups, you're looking for a rejection within an inner supply and inner demand area. An inner supply area is in an area of green, you have areas that have a darker shade of green, right? So these are the areas that we were boxing in yesterday. So for example, here we can see, and we'll also see how this particular trade that's in here that's currently running for a buy, why it's valid. So, but let's start with this one at the top here, this one for a sell. So in here, you can see that price rejected from this inner supply zone. So if we kind of box in the red zone here, or the darker shade of red in there, and take it off, you can see we have this candle with a wick rejection and nice bearish candle close. Okay, so what do you do here? You set your pending order below the low of that candle, stop loss above the high of the candle. So in this instance, you'd get like a 70 or $7 stop loss, whatever, 70.770 pips, however you calculate that on gold. And then you go for your 1:3 or 1:2. And you can see for this one, it pushed up heavily down here. Again, be careful of finding counter trades within the setup. So in this instance here, yes, it was a sell that was running for gold, but this was also a demand zone. So you see the zone that I've marked up here. So if we turn back our zones, you can see this was actually an inner demand zone as well. So this one was actually a valid buy, but remember that concept of first in, first out. If you're in a trade already, don't enter into another trade. It was a valid trade, but you can see it ended up losing as much as it's a valid trade. But if you ended up not taking this buy, you'd have gotten your 3R just comfortably without taking the loss on that buy. So I guess that's one thing I forgot yesterday. So first in, first out. So if you're already in a trade, no need to take any other trade. If we look at these zones, as price pushes down, you're going to get, so these ones have already been taken out. So remember what we mentioned yesterday, if you have an inner demand zone and you have a bearish candle close past those zones, it's going to automatically take them out. So in this instance here, we had this inner demand zone that's right here. Pretty much, you can block this off, or if you want to just do that. And you had a candle rejection. So remember, you want your wicks to be bigger than the candle's body. So you want the wick to be at least 50% more than the body of the candle. In this instance, set your pending order above the high of that candle. This one you could have gotten away with a stop loss of like 2.5 points on gold. And then you go for 75 points or $7 stop loss. And this trade is still currently running, about to hit take profit for a 1:2. So it's as simple as that. And in the afternoon session, I do love these setups because you kind of you can get away with a tighter stop loss. So this trade, it came up after 1:30. So I'm in this trade. But unfortunately, I wasn't able to make it to the live session before. But anyway, so we still have about 50 more minutes. So let's see what we have. So we can start marking up our zones. So if we mark up, we have this inner demand zone that's right here. So we go ahead and mark it up here. And since I'm already in a buy, unless this trade hits take profit, I'm not going to be looking to take any trade before this one hits profit or stop loss. So in this instance, it has already reached a 1.2.5. So in future, if I'm in a trade like this with y'all at a 1:2, it's your decision on whether you want to take partials or just set break even or just hold to take profit or stop loss like I do. All right. So at this point, we can go ahead and take out the zones indicator just so that we have a cleaner chart. So I already know here automatically that these are my selling zones right here. With this one for the order blocks, this one is, so we've already retested the, what is this? We've already retested the, what order block is this? We've already retested the 30-minute bullish low. I would rather take buys on US30 because for me today, you can see where I started even looking for sells on US30 all the way up here. Then I took another sell right here. So I've already sold US30 today. I sold for like 600 points or something since market open. So this is kind of like a wide area to even think of taking sells again. So I would rather, what is this? Yeah, so US30 has dropped about 580 points. Because if I take a sell here, if this 15-minute candle closes, because we've already retested the 30-minute bullish low, if it closes below it, there's two ways we can go about it. Typically, looks like we can get away with a 30-point stop loss and 900-point take profit for 1:3. And now this one I typically would go for a candle closure entry as opposed to a pending order. If you want to be safe, you can have a wider stop loss, but this is such a big move. You'd have to be betting that US30 has to correct further down and go for like a 250-point take profit. This is the safer move right here for US30 if we do get this. So we'll see. It's like a, what, 70-point stop loss? But we'll see. We'll see whichever comes first. So we have two possible entries, one for US30, one for gold. For me, gold has to hit take profit for me to even think of taking sells first. Um, and just remember, so tomorrow is also NFP. So this week the markets are just on and off. If you do get a good trade, it's good, but if you do get once the market does give a good trade setup, it's pretty good. Like this morning, because pretty much before NFP, you expect some sort of trending or some sort of trending market. But yeah, so tomorrow's NFP. So for US30, let's see what's happening. I would rather this candle to close above this order block right here. But I'll get ready to take this trade. Let's see. I don't know whether it's going to be a 100. Okay. It's not the best sell, but this one is a sell. Let's see. Sell. All right. So I'll take the sell. So there's two ways you can take the sell. So you're going for a 1:3. If you want to be safe, take like a 70-point stop loss and 210-point take profit. If you want a quick in and out, you can easily go for yeah, I really don't. If you want a quick in and out, you can go for a 20-point stop loss and 60-point take profit. I would rather do the bigger one So for me, I'll go for this one. So I'll expect that US30 will drop further. So this is for me, my recommendation, just go for like a bigger one, maybe 60, 65 point stop loss. Just make sure your stop loss is well above this 30-minute bullish high. For 2060, it's nice and quick, but yeah, I'll just stick to the largest stop loss. So this might end up being like an intraday or swing trade. And then I'll just let that ride. For US30 here, for the supply and demand, we have, let's see what we have. We have this zone right here. Actually, this one. And for sells, I have something like, we have that. If we close inside this bullish order block, that's not the best thing that we want to see. You typically do expect some sort of, if you're trading order blocks like this, the worst part for this trade is that we're in a down, well, we're pretty much oversold. But if you look at what happened with this trade, so there's one of two things that happen with this particular strategies, right? So in this instance, the reason I took a sell was price opened above the 15-minute bullish high and closed below the 15-minute bullish low. So as much as that's a bullish order block, by opening above and closing below the bullish order block, that pretty much invalidated it. So another way to think about it is think of this area as support, as a support area. So even before, if we go one candle before, ideally, what you would expect if you're coming, because price is above this level of support or below this or above this order blocks, you'd expect, if this is an area of support that's going to hold, you'd expect price to tap in, and then you have a reversal to the upside. But what typically would happen, what's the alternative? The alternative is what would happen if price closes below. If price closes below, that tells you they've broken support. And then sometimes they come back and retest that support area that's now resistance. And then price ends up dropping down. The other scenario is if a candle closes below that area of support, which now becomes resistance, you don't always get a retest of that area. Sometimes price goes down or keeps going down. Now, today, what happened? Today, this candle opened above that area of support and closed below it. And then what happened? What scenario happened in this instance? So price did not automatically shoot down. However, price came back and gave a retest to this support area, which now became resistance, and then started pushing down. So that's what I would hope is happening now. So you can see price came back up, is testing or tested that area of support, which now has become resistance to US30. And now my hope would be that we continue pushing down. Also, we have to think of the time of the week that we are at. US30, in times of when US30 has touched the all-time high or has played around with the all-time high like Monday or Tuesday, Thursday and Fridays are typically like rallying days for US30, especially when it's played around with an all-time high. So, which is why I really wanted to get a buying opportunity here for US30 instead of a selling opportunity, because given that tomorrow is Friday and it's also NFP, we can probably, and also given that we were just at the all-time high 2 days ago, I wouldn't be surprised if US30 pushes up from even where we are. But even looking to the left, we still have some sort of long way to go, or some downward momentum to go maybe around this area. But I would just hope maybe we get something. Now, the alternative is, and what time is it? Right now it's 14:20. The other best case scenario that can happen for this particular trade is we get stopped out of this trade. And then once we get stopped out, we get an opportunity to buy. So if price stops us out here and then gives a retest of this bullish order block from the upside and then rejects from it, now this area would have become support and we can take a buy to ride price back up with that expectation. So either way, whichever way that ends up happening, we can be able to ride price in both ways. Now you can see here what's happening for gold. You see that we are getting to around that area or the first area of inner supply. So we can possibly get a selling opportunity for gold. We can get a selling opportunity for gold at some point. Maybe if we hit take profit on this particular trade here. US30, so we'll just let that be. If US30 decides to keep pushing up, let's draw our inner supply zones. So we do have something like this. And we do have something like this. And we can go ahead and turn this off. So we do have like our supply zones on US30 up here. And then we do have that demand zone. Let's see. Actually, wait, let's see. We have a buying opportunity for US30 here. maybe I should keep this zones on because let's see, what time did this get created? Okay. We do have a buying opportunity for US30 here. It's a little. The other thing when entering or putting in these pending orders, yeah, so on the high of this candle. The other thing when putting some of these orders on, you want to see how far. So if you're taking buys based off of an inner demand, you want to see the distance between your entry and your inner supply. So you can see here. So this is a valid actually trade right here. If you put your, like just by putting a pending buy order, and if I take off the indicator just to remove the colors, you can see this inner demand zone here. What did we have with this candle here? This doji candle, we had a weak rejection. The wick is bigger than the body. The weak rejection from the demand area. The wick is about maybe even 5 times or 4 times bigger than the body. So in this instance, just placing stop loss above the high of this candle. And I'm sorry, pending buy order above the high of this candle, stop loss below the wick of that candle. Now, in this instance, even though I'm in a sell here, which I really don't prefer, I wouldn't consider this like first in, first out because these are two separate strategies. So in this particular one, I can take a buy and a sell on US30 because they are both different strategies. What I meant by first in, first out is that on the left-hand side, the left side chart, that's the order block strategy. The middle one and the last one are the supply and demand strategies. So for each strategy, you do not want to be in, and this is US30, right? For each strategy, you don't want to be in multiple trades. So let's see, how big is this stop loss? 60 points. If price wants to dip down from here, well and good. And again, that's, as I mentioned yesterday, that's the beauty of pending orders, because if US30 is supposed to continue being bearish, it really doesn't have too much business coming back above. Of course it can, but it really doesn't have too much business coming back above. But you can see here, even though here the take profit is 180, the barrier here is this inner supply zones that are right here. That's the major barrier. But again, they also act as liquidity. So if buyers come in and the trend is supposed to be bullish, as my expectation is, it wouldn't take much for US30 to break this inner supply zones here. And keep in mind, yeah, so the pending order, I'm going to put a pending order there and see how it goes. Pending order for a buy above the high of that candle. Think you can get you can get away with a 50 point stop loss, I think. No, 60. Mm-hmm. 60. Now, if price pushes down and invalidates this inner and invalidates, I have my buy stop, and invalidates this inner demand zone, because if we have a bearish candle that closes below this inner demand zone, or this, and I'll stop calling it inner demand zone and inner supply zone. I'll just call them supply and demand zones. if we have a bearish candle that closes or pushes past this demand zone will automatically be taken off on the chart. In that instance, I'll just go ahead and cancel my pending sell order. So the 2 trades that I'm in is this gold buy here that I got in. I think this was at 1:50 p.m. I mean this US30 sell here based off of the order block strategies. This one is a retest and closure below a bullish order block, signifying a sell. I have a pending order here for US30 pending buy order with like 60 point stop loss, 180 point take profit. And actually here, you can see we have candles that are testing the same demand zone. If we can easily get a smaller candle that's testing this inner demand zone or testing this demand zone, and we can actually take a trade based off of that. So just note, this candle closes in about 3 minutes. If this candle closes in 3 minutes, we can even get in for a tighter stop loss, a 20-point stop loss, and go for so instead of my pending order is for a 60-point stop loss and 180 point take profit. That's pretty wide. For US30 is not too wide, but it's a wide stop loss. That would be like an intraday trade. So we can easily, you see how it has rejected off of the demand zone. So we can easily get a trade here. And let's see how big the stop loss would be. So far, if the candle closes the way it's closing, I would adjust my pending order to come to this trade setup here. So something like I will move for this gold entry, I'll move my stop loss to break even. I really don't like that bearish candle. But here for US30, and I'll go ahead and turn this off. Turn this off for now. Here for US30, this is 30 points. Yeah, so 30 points stop loss. Now, only if the wick from the bottom is much larger or is at least 50% of the body of the candle. So if we have a strong body closure, or if we have a big body closure on this candle, I'm not going to set a pending order. So I'm just waiting in the next 1 minute to see how this will close. So I'm just prepping my trade manager so that I can set my pending order. Okay. All right, 20 seconds. So if this candle closes this way, I'm not going to set a pending order based off of this candle. All right, so gold might be pushing back down. So let's assume so this one I'm not going to set a pending order. The wick rejection, the wick is about 5 points. The body is 6 points, 7 points. So I'm not going to set a pending order there. Let's make sure the zone is still, I still have my pending order up here based off of this candle. So I still have a US30 pending order up there. For gold, I'm out at break even. Came so close to my 1:3. But price kept pushing down. last week I was trading with a 1:2, but this week I decided to try out a 1:3. And by the end of this week, I'll just compare the results with 1:2 and 1:3. If the 1:2 is better, next week I'll probably be targeting a 1:2, because here today, if I went for a 1:2, because this trade went for like a 1:2.7 or 1:2.5 at the very least. All right. For for gold, the zones have updated. So we have a very, very small demand zone here. Such a small zone. If this candle closes the way it's about to close or wants to close, it will invalidate. So you can see our demand zone is still there. But if we get a bearish candle closure, this demand zone will be taken out, and then we'll start targeting these demand zones that are down here. So we have some more down here, which again is good because again, in this cell on the left, and you can see, right? You can see it's disappeared. So this zones update in real time. So they don't repaint. It just depends on price action. Um, So if this candle closes this way, I'll go ahead and delete my pending order, this pending order that I set up here. Because again, the zone that it's based on, and this is again the reason I prefer pending orders for this strategy, because you remember when I said that if US30 is meant to be bearish, it has no business. Sometimes it will do that for fake out, like sometimes it will come, try to break the high of that candle and come back below. But if US30 is supposed to continue being bearish, it has no business coming back here. So that's why in this particular, especially for this strategy, I use pending orders so that in this instance, I just survive, because if I had entered based off of market order, you can see we would be like 50% in drawdown. So that's why for supply and demand, I like using pending orders. All right, so let's see. So this zone is already out. I'm not going to delete my pending order yet. I need this candle to close, because this candle can close and that zone can be restored. So I'm only going to delete that pending order on the closure of this candle, because you see how it has a wick from the bottom. It can easily create its own demand zone, and then we can actually end up setting a pending order at the high of this candle. All right, so you see the way it closed, it's cleared out that whole demand zone. So I'll go ahead and close out my pending order for US30. So there's no pending order there. So we just wait for something else to build. So for US30, we have this demand zones here. See, so gold is coming to that little demand zone. So this demand zone is, so you can see how small it is, right? It's created by the intersection of this demand zone here and the intersection of that demand zone. US30, again, this might end up being a swing trade, but it does have potential because we've been rejecting from that order block zone. So another way to think about it, instead of thinking of it as a high and low order block, just think of it as a resistance zone up there. So this whole zone is a resistance point for US30. The 2060 stop loss that we had talked about earlier would have been taken out if I'm not wrong. Or not. Oh, no. Yeah, it would have been taken out. So that's why, yeah, that stop loss was a little too tight. So in such instances, I just prefer just to be safe, even though it means going for a wider one. All right. It's 2:45. So the afternoon session, I stopped trading at 3 p.m. So we have 15 more minutes to see if there's anything. I really don't see anything unless US30 comes into this inner demand areas. Okay, US30 has created supply zone here, so we go ahead and box that in. Gold has another supply zone here. Box that in. We can turn this off. All right, let's see. All right. I don't think we'll get anything. Because the last time that before 3 p.m., the last time I can get into a trade is 2:55 p.m. None of these 5-minute candles look like they're giving anything. So I'll continue holding this US30 sell. Hopefully we keep breaking down. Unless we get like a heavy news item that would push price heavily down towards take profit, I would expect this to be an intraday trade or even a swing trade. If it's going to hit take profit, maybe overnight. If it's going to hit stop loss, I think that can happen before market closure. But for take profit, unless we have like a big, somewhat fundamental news event, um, yeah, that's the only way. For gold, for supply and demand, let's see what gold does here. We have 30 seconds. If this candle touches this demand zone, it would, I don't even think that's going to happen. It would have to touch this demand zone and reverse heavily back up and give us a long wick. And then we would have to set a pending order at the top of this candle. I don't think that's going to happen. We have 10 seconds. So let's see how it goes. 3, 2, 1. Yeah, so that's it. Tomorrow there won't be any session. I can't do a morning session. I don't Friday I don't do any afternoon trading. So the next live session will be sometime next week. But yeah, so this week during the live session, we are just down minus 0.5%. So that's not bad. And going forward, we'll be taking fewer trades because we'll only be taking fewer or we'll only be doing one session. Yeah, but other than that, I will see you guys next week. Have a good